Morning, Brigitte.
Morning, Chris.
How are you?
Kicking along.
Good.
And you?
How was, I'm very pleased it's July 1.
Yes. That never seems to change every year, does it?
I had a conversation with a client yesterday about this. I was saying, does it get easier or is it just the same level of manic? And I was like, I just feel like as we're getting bigger, it's just getting bigger. I don't know.
Yes, that is true. It goes from one client to 10 clients that you have to deal with pre-30 June. But at the very least, the markets have been doing well, so we have one less thing to worry about.
You're exactly right. That is very true, rather than having to deal with tax planning and then, I guess, dealing with the emotional responses to a plummeting market. So, But, glad to be through July and into, through June and into July. So, but there's a lot happening.
There is always a lot happening.
Definitely. Say. All right. So as of today, 2nd of July, I guess a bit of a summary of sort of the last maybe month, or I guess always with these is pretty hard. I guess more like in the last week, I think we've had a pretty, I want to say humanitarian month that's been pretty horrible.
Yes. Hasn't been great, I would say. And I think this echoes what everyone felt in the first time the war broke out, right? Yep. Because, it all seemed doom and gloom for the first 3 weeks, and then it was business as usual. Yeah,
which feels, as a human, feels a bit hollow to me sometimes, where it's like there's all this suffering that's going on, and I guess I look at like something like this where you think, geopolitical tensions seem to be easing, and then markets are bouncing. That's kind of the focus. It sometimes feels a bit trite to just sort of ignore what's actually happening on the ground.
It is, but I think that speaks to the market itself, that it's very segmented in what it cares and what it doesn't care about. And you can't deny that what's happening out there is just almost like a genocide, right?
Yeah, correct.
And it's awful for a lot of different reasons, but unfortunately the first thing that the market cared about was what's oil going to do.
Yeah, correct.
That's the only thing that everyone cared about.
Yeah.
But, oil prices, I suppose, have settled down.
Yeah, definitely. Well, I guess in terms of like looking at it as a, I would typically look at oil as a proxy for risk, especially in a conflict situation.
Yes.
That's probably a good point. I'll flip to that chart here. So as you can see, top right corner, for those who have downloaded the chart, which is normally attached to the YouTube or the podcast link, you'll see there on page 4, oil prices have really dropped off from we had that real spike in June when no one really knew what was going to happen. I guess there's always a bit of a risk that continues to go back up, depending on what Iran's responses are from here, which who knows?
Still steady as she goes at the moment. So let's hope for not just oil prices, but the world that stays that way. Yep,
correct. But so, and even in the bottom right corner where we're looking at bond markets, again, another, I guess, proxy for risk in some way, where we're looking at 1 week changes in the 2-year yields and the 10-year yields. So basically, for those who don't know how bonds work, I guess if the yields are down, the prices are going up, which means prices going up means people are buying. So I guess they're feeling a bit more secure. Yields go up, prices go down. So prices are going down, people are selling, so they're obviously feeling a bit less secure. So the fact that if you could kind of look at the 1 week change in both the 2-year and 10-year bond markets across the world, right? So you've got US, UK, Euro, Canada, Australia, and Japan here. Sort of gives you a bit of a show of the sentiment of how investors are feeling. So, geopolitical tensions are easing. We're all kind of going back to, well, quote unquote, normal, but that's very US-centric.
That is, but I also think that we're actually at a point now where we can retire the phrase transitory inflation.
Yeah, I think so.
People recall, throughout COVID, it was sticky for a few years, and it's been transitory for at least the last year or two.
Yep.
But I think, with the market pricing in a September and December cut,
Yeah.
And potentially July, which, again, really just depends on what what happens in the next few weeks.
Yep.
I think that's again the same sentiment, at least, you know, in our homeland now, where,
Yep.
you know, people are fully expecting massive cuts over the next 6 to 12 months.
Maybe, which I find is really interesting to see if those cuts don't eventuate, because who would want to be a central banker ever, but particularly right now. I wonder what that will do to confidence and sentiment if those cuts don't come. I think I don't know what you think, but it's probably less likely that doesn't. It's likely that those cuts will happen here in Australia, but in the US, yeah, who knows? Like, yeah, they've got a tougher job over there.
No, they do, and you know, I just feel like at this point, they realize that they're sitting ducks. It's almost like it doesn't really matter whether it happens or not. They just have to continue on. Yeah,
well, it's interesting, isn't it? It's a bit like, it's just, you almost have to follow your course of action because it's so unpredictable and see what the data says.
It is.
Yeah, it's hard.
And, you know, at least, you know, locally, with inflation steadying as well in Australia, I think that's a pretty good reflection as to how people feel about it. It's not so much front of mind anymore because, you know, you're starting to see a pickup in house purchases as well.
Yeah, absolutely.
Even without the cut happening in the first place.
Yeah.
I just think that everyone's at a point where they realize that they're not going to let this stop what they actually want to do.
Yeah, correct.
Which is good for the economy as well.
Yeah, I think so, definitely.
But yeah, no.
Good for homeowners, not so good for those wanting to enter. But it's yeah, that's a really interesting point because even just anecdotally in terms of conversations I've been having and articles, and this could be confirmation bias, who knows, articles I've seen on websites, there's a lot more positive sentiment around house prices, and house prices are picking up, and I even just having conversations with people at school, and you know, everyone's just expecting prices to lift. So I think that helps the wealth effect. So.
It does, and you know, at least it'll be a really busy spring coming up with a lot of properties being sold in the market or even being put up in the market. Because I think even internally, that's a conversation that we're all having with clients at the moment, that they're just ready to let things go this time around. But, you know, the house conversation is always interesting, right? Because if you look at the overall wealth of Australians over the last 3 or 4 years since COVID, it's almost like it's an artificial uplift in a way. Because, you know, I think wealth overall has gone up by about $6 trillion. But I think if you ask people, they had more in savings throughout COVID as opposed to now, because they're just trying to keep afloat with the increased repayments and trying to get their head above waters. So
yeah, it's interesting, isn't it, where wealth goes up, but maybe the sense of wealth maybe hasn't.
Yeah.
So it'll be interesting to see how that plays out over the next 12 months. But yeah, like just talking about property in terms of coming on the market, I remember having a conversation with a mortgage broker last week, and he was just saying, like there's been lots of people holding on to properties for the last year or so, coming to this spring expecting, you know, volumes of houses on the market to really accelerate. So let's see if the demand's there, I suppose. Yeah.
Again, fingers crossed for everyone really at this point, because I think it'll be a win for both parties, whether you're on the seller side or you're buying. But, you know, speaking of property as well, if you look at the commercial properties around us at the moment.
As I look out to all the, like,
the building
space.
that we're in. But, you know, with the whispers about the revenge tax that the U.S. was going to levy on everyone, it seems that at least based on the bill that was passed this morning, that the fear has tapered off for now.
Hopefully. Yeah, hopefully. Well, yeah, it's again, it's going to be. I haven't quite got across the details of the specifics. I heard that it got passed through Senate, but not the specifics of actually what was in it that got passed. But
yeah, it was basically just the U.S. signing off on a $5.4 trillion tax cut. So they've got more money to play around in some areas, and then less money to play around with some areas as well.
Right.
But obviously what that's done to a causal effect of the other tax that's in play, which is the Section 899, is that it's not so much of an issue now as well, especially because the U.S. have also just received an exemption to not pay the 15% corporation tax for doing business in other countries as well. So I think in their mind, given that we don't have the tax coming our way, the revenge tax isn't an issue. And subsequently, companies who are doing business in U.S. assets are just relieved.
Yeah,
today.
I'd say so. Yeah, so I guess it's like international companies, like
Yeah,
do
'cause if-
business in the US. Yeah,
Yeah, because even if you think of the super funds in Australia at the moment with U.S. assets, a 15% tax is going to be
yeah, correct.
quite a big of a hit to
Yeah,
everyone's
so that's a
money.
really interesting point where it would be very easy to look at that bill that's passed and say, oh, it doesn't really affect me. It's big institutions, but then your point there about most of our super funds will all have some sort of US allocation and won't be US citizens under IRS law, so that
No.
tax would have applied to everyone's investments essentially. So
Yes, so
Yeah.
I think everyone's happy with it for now.
Yeah.
But I also think that the actual Americans aren't happy about it because, unfortunately, the tax cuts are affecting, I would say, the more humanitarian aspects
Yeah.
of the U.S. laws.
Yep.
So, it's cuts to Medicaid,
Yep.
food stamps, even the electric vehicle tax credits, which
Yeah.
is probably why Musk and Trump aren't really besties at the moment.
Yep.
But if you think about it, you're regressing in some ways and, moving forward with some of the things that the market care about.
Yeah, well, this is the issue with America, isn't it? Where it's sort of, market number one, people two, and if you're looking at it, we have a bit more of a quote unquote sort of socialist view, I guess, here in Australia, where we kind of try and take care of everyone. It feels a bit backwards.
It does, but I think, at least from our point of view, America as a market itself is still something to be backed with. So
Yeah, I think so.
that hasn't changed.
No.
If it will change, we can adjust fairly
Correct.
quickly.
Yep.
But I think at this point, much like all the Americans and other people around the world, there's not much we can do other than sit and watch.
Yeah, well, that's the thing, isn't it? It's like trying to move like we always were talking about, removing emotion with investing, then you're just trying to remove those emotional biases too around. You might have a particular ideology that's different to, I guess, the way, rampant capitalism works. But also, that might be financially detrimental too if you want to follow those ideologies. So it's just about the trade-offs really, isn't it? So,
Yes.
yeah.
It's all about balance at the end of the day,
Yep.
right?
Yep, correct.
But, I don't think, at least from our point of view, that we're expecting any massive shifts
No.
at the moment.
Well, it's still just a huge market.
It is.
It's so competitive, and the biggest companies in the world are there who are the most competitive. The world supply chains aren't going to change overnight. I think there'll be a shift over, but this is like decades, right? So
True.
these things move slowly. But I agree. Like no real changes, but I think keeping on top of them is important. So yeah.
It is.
Yep.
And as always, diversification is important.
Correct, exactly right. So we don't end up with, I guess I'm still looking at page 5 here, where you're kind of looking at the big fall off the cliff and then a big climb up it. We want to try and avoid too much of that. So yes, diversification, absolutely. Yeah. All right. Anything else, I guess, you want to close with, or?
No, I think we're okay
Pretty
this
good.
month.
Yep.
Yes.
Yep.
It'll be interesting to see what happens next month, though.
Yeah,
just
definitely.
in regards to any changes in the next few weeks that are coming.
Yeah, well, it's going to be policy change. It's going to be geopolitical change. We'll probably see more in terms of interest rates and where inflation's headed and what that looks like. But yeah, as always, it's a moving feast. So
It is.
yes, we'll see you all next month, and have a good one.
See you.